Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Welcome to this episode of our program. This is Mike Saunders with Marketing Huddle, and today we have with us Conor Delaney, who is with Good Life Advisors. Welcome to the program, Conor.
Thank you for having me.
Hey, so give us a little bit of background on yourself and your business, and what led you to Good Life Advisors. And in a 30,000-foot view, what is Good Life Advisors focused on?
Sure. So we are what you call a hybrid RIA. In essence, we're a small version of a Merrill Lynch or a Morgan Stanley. I founded the company with my partner, Courtney, about 5 years ago. And essentially, we are working in various communities around the country with advisors from all different backgrounds, all different former broker-dealers, to provide them with the platform and the infrastructure and such that they need to deliver financial products and financial planning advice to their clients.
And is there a specific vertical or demographic that you focus on? Whereas a lot of people, may say, anyone needs financial advice, so I'll help anyone. And that could be so broad. So do you have a specific vertical you like to work with?
That's a great question. The way that our business is structured here at Good Life is that each advisor is their own private practitioner. So we have advisors that specifically cover, say, retirement planning, and they're retirement planning specialists because that world of 401k, 403b has gotten so technical over the last 5 years and so very specific that you really need to be a specialist in that space. We also have advisors that focus more on tax planning or estate planning. So the way that our company is built, it's not so much to support a particular type of demographic. It's really to provide the best experience that we can to the advisor so that in turn they could provide the best experience for their respective client bases, whatever that client base might look like.
But yet, in the agency, am I correct in hearing what you just said, that if you had someone that needed a specific type of advice, you've got someone for that, and maybe there's some cross-referral within the agency because they realize, I'm not the best at X, but the person that's really got the expertise, I'm going to have you working with them.
Absolutely. I mean, that's one of the things. It's weird, the evolution of how our company came to be, in that myself and Courtney, when we started the first company, we were 19 and then went fully in. I was 19. Courtney was 21 when she joined me. And then we went fully independent when we were 25. And we're not necessarily the smartest people in the world, but what we saw pretty quickly was that we were better locking arms with other advisors, with other people for scale and for crossing different service offerings like you alluded to than what we would be if we were on an island by ourselves, which is why we formed and evolved the company the way it is. But you bring up a good point. Our advisors, we only get together a few times a year as a group of us in different locations for cluster meetings or whatever the case might be, as well as conference calls and stuff like that. But they've gotten to know each other very well. And so there are often times where you have, the wealth managers that deal with high net worth clients out in Denver that they stumble across a large 401k opportunity, and they turn that 401k opportunity over to the 401k specialist who might be over in Philadelphia, not because they have to and not because there's any manual that says, hey, this is where the workflow goes, but because everybody's created such a tight bond with one another that we know each other's business model. We know what we're good at and what we're not good at. And we're happy to see that the client is getting the best client experience by pairing them with the advisor that's going to be most suitable for them.
Well, and I don't know whether you've used the word yet, fiduciary, but I think there's another aspect of fiduciary that comes into play, which, in my opinion, fiduciary is doing everything right by compliance and things like that. But the other aspect is just the fiduciary responsibility that you have as an advisor to serve your clients with the best knowledge and support. And if you have that lead for the 401k client, and you're like, what, I could probably stumble through and give them some good service and handle the account. But old Tom down in wherever, he's the 401k king with our firm, so I'm going to pair him up there because I know that my wheelhouse is something a little bit different. And I think that comes into play, and I really feel that, the old cliche, what goes around comes around, but really that client sits up and takes notice if you can make that warm handoff really, really powerful to explain just that. And I would suspect that you would even have some examples of times where that happened, and, Tom that handed it off to Fred gets a piece of business because the 401k guy says, you know what, I really appreciated that, and I've got now something that I think your expertise is really, really dialed into.
Absolutely. I mean, the thing is, when we recruit, there's 630,000 advisors or something in the industry, and so at Good Life we don't need all of them, although we would have a very nice business if we did. We need a very, very small piece of that market share in order to be a very successful company. And so we really look for the guys that are like-minded, not necessarily in how they structure their business, but in the way that they approach a business. And you bring up a good point. I mean, there's a lot of times where an advisor might say, hey, I'm going to take this. A lot of us have come from cultures where you keep everything close to the vest because you don't want the guy in the cubicle next to you to hear what you're doing. But I'm specifically looking at advisors that are thinking abundance, not scarcity. And in that mindset of abundance, you're going to find that guy that says, you know what, this is better suited for somebody else. But taking a step back, it's amazing how many retail customers, how many families aren't working with any advisor, or how many 401k plans don't have somebody that's there providing education and stuff like that. And so even if it's something that's not in Conor Delaney's wheelhouse, as a private practitioner, I know that the skill set that I have and the licenses that I hold and the experience that I have in the industry puts me on a better path of helping them get somewhere, even if it's not because I'm the best in that specific area, until I can find somebody that I would, obviously pair that off to. But, in the 401k world, the other issue that they have is the folks that are sponsoring the plan, the employer, they're also fiduciaries. So, they are taking a step back and saying, you know what, maybe this is something that I do need to do my homework on. And even if I have a friend of a friend who's a financial advisor, if that person's not up to snuff on all the changes with regards to, Regulation 408B2 and all the different things that have happened in the 401k space over the last 5 years, I better find somebody that is, because there's a tremendous amount of exposure there. So, there's really two levels of that. The first is I need to talk to somebody that is licensed and has the experience to help me. And then, getting more detailed, is this person specifically suited to help me with whatever my need may be, whether it's financial planning or estate planning or, 401k planning or whatever.
Yeah, can you speak to the benefit a potential client has that you are independent, as opposed to, I want to use the word captured, but maybe that's not the right word, but, like you mentioned, larger firms. Sometimes I would suspect the advice coming out of larger firms is directed and guided by the higher-ups that say we need to push this product or that product. So is there a benefit, or could you speak to the benefit of working with someone that's independent like you are?
Oh, absolutely, and that's one of my favorite questions because the average person doesn't know any different. I didn't know any different. I grew up. My parents are school teachers. My father passed away when I was young, which got me into this business when I was 19. And I didn't know what I didn't know, right? And I feel like the average consumer is in the exact same boat. And I lived in a world before I went independent where, most of the structure around how I was able to put bread on my family's table was selling proprietary stuff, was pushing, the strategy or the product of the week. And frankly, as an independent advisor, the best part is that my firm doesn't manufacture anything. There's the custodian that we use, LPL Financial, they don't manufacture anything. So when we are giving advice, it's based on the most level playing field that we can provide, because there is no additional incentive for me to sell, LPL mutual fund or good life insurance product, because there's no such thing as that. So that's a great point. Independent advice has really come a long way, and I think it really has to deal with. So 2008 happened, and prior to 2008, my parents and many other families around the country would consider themselves accomplished if they were to be accepted as a client of Morgan Stanley or Dean Witter or whatever the case was. And then 2008 happened, and the interesting thing is that after 2008, the clients started to get smart. And they started to say, you know what, I don't necessarily care what's on the business card. What I care about is when I call my advisor, is he going to answer? And, it created a great opportunity for myself. I was fairly new in the business, 3 years into it. My partner was brand new into the business. The poor girl spent the first 11 months watching the market go down the drain. She didn't have much fun at all. But because when clients called, or when people called or needed us around the community and had questions, we answered. And I think that after 2008, clients just started to think differently about how they wanted their products delivered. So it's created a good opportunity for independent advice, and I think that's going to continue to be the trend going forward, that the relationship is the most important thing, not necessarily whether there's a bull on the business card or, a big U.
Yeah, and I think just knowing the industry, even back a chunk of years before what you just mentioned, there was another shift, which was back in the day, you would get the call from your financial guy, and he would say, we need to move this much into this much fund, and all of a sudden every move you made was commission, commission, commission. And then when the move happened, where so many, if not most people these days are working with assets under management, which is you get paid based on how well the client's money grows, not if you make 10 moves in a quarter. And I think that realization helped people realize that you're on their side as well.
Oh yeah, I mean, I have this conversation oftentimes when it comes to healthcare. Not to totally get off subject, but we live in a world where do we really have healthcare, or do we have sick care? Right? There's a lot of countries around the world where the doctor gets a certain amount of money, and then every time that he needs to do something, he actually gets charged a little bit less. And so much the same with us. We're in an environment now where the better the client's health, the better their portfolio is, the more money I make. The worse the client's portfolio performs, the less money I make. Now, it's funny trying to have that conversation with the client when the markets are down and their accounts are down. And I'm like, guys, my income goes down next month. You're 37, and you're not going to realize the effect of this for 22 more years. We have plenty of time to dig out. They don't seem to care very much about my income in that given time. But the point is that, we've moved to an environment where the advisor is more aligned. I think all the new changes with the DOL, and the best interest contracts and everything, it's really going to level the playing field. We're excited about it because we're positioned really nicely as a firm that's already been a fiduciary. So I think that the best is yet to come for us. And most importantly, I think the best is yet to come for the clients as far as full transparency and the most level playing field that they could be a part of.
Yeah, so what are you seeing on the market today regarding, and a lot of times you can gauge the climate of the market by the frantic calls that come in or the inquisitive calls that come in. So from what you're hearing from clients and prospective clients, what are kind of the fears out there that you're able to then smooth over? And then what are the things that people are going, all right, we've kind of moved past the 2008 mess, and I'm kind of getting my legs back under me. Let's now move into, this, direction, which might be a touch riskier than the post 2008, but yet it's not risky. Where are they kind of getting their second wind now?
It's funny. I think you have two different types of clients. You have the clients that have been sitting on the sidelines since 2008 because it got hurt. They got hurt so badly, and in the meantime, they missed 100% move in the market. And then you have the other clients who, they're saying, "Hey, slam the foot on the gas pedal." But then the first time that they lose a little bit of money, hey, hang on a second. I'm like, guys, let's not forget how bad 2008 hurt before we push all of our chips into one particular area or the other. And I think what it boils down to is that, Courtney and I, my partner, we grew up in a culture of financial planning. Even though there were things that we didn't necessarily like about the last firm that we were a part of as far as proprietary stuff and whatnot, they did give us a great foundation and a great knowledge base as it relates to structuring a financial plan. And we've carried that culture with us as we've built Good Life, where actually a fair amount of my advisors came from that previous firm. And really the 50 or 60 guys that we have on board now, we all kind of are cut out of the same cloth, which is that what we're trying to do is manage a financial plan and manage a strategy, not necessarily manage the market day to day. I think if you can remind the clients of that, I always go to the analogy. My father was a school teacher, and when he would do his quarterly lesson plans as a fifth grade teacher, maybe the first quarter was, hey, we want to get to chapter 6. And if the week of parent-teacher conferences, they were at chapter 7, he knew he could pull the throttle back a little bit. But if he was at chapter 4, he knew he had to put his foot on the accelerator and push the kids a little bit harder. So I think it's the same thing when you're talking about investing money, irrelevant of or irrespective of the market conditions. You really have to say, where are we as far as total account, and where are we trying to get to? And then we can structure, do we need to save a little bit more? Do we need to earn a little bit more? Or are we ahead of our goals, and can we pull the foot off the gas a little bit? I think if you can, be more of a relationship manager instead of a day-to-day stock watcher, the client's always going to win.
Yeah, that's an excellent point, because invariably you're going to get all up in arms about these small, tiny moves. But if you look at the long term and keep in mind that you do have many years, even though it doesn't feel like that, and certainly we could speak for hours on end on how a millennial would invest differently than a Gen X or a Boomer, because the time frame is different. But the point is, you said a really powerful word that I think people need to keep in mind. You have a plan and a strategy. So when you have that, and then you've got a good, solid a plan and strategy in place, then you know that making those moves are nice and methodical and calculated, and then you just see it to fruition, and you just know the outcome is going to be positive because you're putting the thought in on the front side.
Sure, and that being said, trust me, our stomachs hurt when the market. I mean, the last 2 days, Friday and today, it's especially our firm is managing over $1 billion. So a 2% move in the market, that's $20 million that just evaporates. And so trust me, our stomach hurts, and there are a lot of long sleepless nights. Of course, my kids add to that part of it, but the idea, though, is that you can't be emotional about it. If you're following a strategy, and if you have the right the right tools in the toolbox, it's just a matter of being able to move along with that plan, and either ramp things up when you have to, or pull things back depending on where we're at in that client's investing life cycle.
So let's wrap up with one final question, and that would be, what advice would you give to entrepreneurs wanting to start a business at any age? You started young, but at any age, there would be a lot of pieces of advice that you would say, here's what I have learned in my 10 plus years of owning a business.
Well, I mean, the thing is that if I knew then what I know now, I may have had a little bit more trepidation. I was very fortunate. My parents my dad had passed, and my mom was fairly sick at the time. And so I didn't have, the parents that were teachers that were tenured that said, hey, don't do this, it's not safe. I kind of just went for it, And so I guess my advice to them would be smart about it, but go for it, because there's not going to be any greater time in your life than when you're young to take that risk. Something's always going to come up, and the timing's never going to be just perfect. The environment that we live in has gotten significantly harder because of increased costs of health insurance, and soon to come down, with higher minimum wage. And so hiring that first employee becomes that much more intimidating and whatnot. But if you don't, I would much rather live in a world where I tried, I saw, and I failed, rather than I didn't try, I took the easy path, and I lived a life of regret. So I think if I'm a young person that has that energy and that drive and that vision, there's no greater time to take a chance than today, and be that beacon of light for your generation that your friends and your community can look up to.
That's super. So how can people learn more about your business or your philosophy and your strategies? What's the best way to contact you?
There's two different websites for us. If you're an advisor that would be interested in looking at us as an opportunity and an option for you, we are advisor owned. Our website is advisoronedria.com. And then if you're a client that's, kind of just looking for some sort of review or wants to get a second opinion on things, certainly they can call and talk to myself or one of the members of the team here. And the website for that site is Good Life, F like Frank, A like Apple, goodlifefa.com. And there'll be all the contact information for our offices around the country and certainly for our office here outside of Philadelphia.
Super. Well, Conor, thank you so much for your time. It was wonderful getting to know you today.
Thank you, sir. I appreciate it.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.